Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Trading TV. This is your stage to shine.
Hello, good morning. Good morning, everyone, and welcome to a new episode of Chat and Chart. This is the London session open, and this is your host, Saif Qaddoura. I hope you had a great weekend, and congratulations to Spain for winning the World Cup. Last week was a bit of a surprise for the markets in terms of inflation numbers, but I believe that the reason behind all this improvement in inflation was nothing but the ceasefire that took place in June. So the numbers were June's numbers. Now, the oil and energy prices in general are rising again. So I believe we're back at it, and we're going to see higher inflation numbers in the upcoming months. So without further ado, let's get to the weekly high impact news calendar. We'll go day by day, see what we have this week, and then we move to the chart to align our technicals with our fundamentals. All right. Good morning, Arif. Good morning, Raya. Good morning, Tai. I don't know how to pronounce it. Teo. And yes, that's it. Viva España. All right. So let's get to it. We start with Monday. Today we have an all-day holiday in Japan, which is the Marine Day. So we saw the weakness in volume in Asia session. So that's pretty much it. Nothing of high impact today. Tomorrow we have nothing of high impact, so we move right to Wednesday. On Wednesday we have the CPI, the UK CPI. By the way, the UK just assigned a new prime minister, which is Andy Burnham, to succeed or to follow what was his name, Keir Starmer. Okay, so Keir Starmer left his position as prime minister last month, and as of today, Andy Burnham starts his tenure as prime minister. So this is going to be very important. The previous reading of UK CPI was 2.8%, which was an improvement from the reading before. The forecast is also an improvement to 2.7%. So anything at 2.7% or below is going to be negative for the GBP. Anything above will be positive and bullish for the GBP. Then we have the crude oil inventories. The previous reading was a draw of minus almost 7 million barrels. The first draw in 2-3 weeks now. So this is starting to reflect the closure of the Strait of Hormuz and the supply disruption that is going to happen because of the reignition of the tension in the Middle East. Okay, so that's for Wednesday. We move to Thursday. Thursday we have the ECB interest rate decision, which is expected to stay unchanged at 2.24%. The deposit facility rate is 2.25%, so no change here. And then the initial jobless claims are expected to be slightly higher than the previous, which was a 3-month low, I believe, 208,000 jobless claims last reading. So the forecast is a slight increase to 2011, but that's irrelevant. It's not going to have much of an impact on the markets. Then we have the ECB press conference, which Christine Lagarde will be addressing the monetary policy and their decision that they took earlier in that day. Okay. Then we go to Friday. Friday we have the Taiwu. Okay, got it. So on Friday we have the S&P Global Manufacturing PMI and we have the Services PMI. So the manufacturing is expected to go higher to 54.5 in comparison to 53.9 previous reading. That's positive for the US economy and positive, obviously, for the US dollar. If it comes in any lower than this, but it stays above 50, it's still expansionary. If it comes in higher, that's even better for the USD. Then we go to the services PMI, which is expected to be slightly better than the previous reading at 51.4 in comparison to 51.2. Anything above is going to be great. Anything below, but anything below above 50 is still okay. Anything below 50 is going to be contractionary, which is bad for the services sector. And then finally, we have the new home sales. The previous was 580,000. The forecast is an improvement to 604,000. So the previous reading, by the way, was like, I don't want to say a historical low, but it wasn't very good for the real estate market. So an improvement could be good for the US economy, and it shows that the Fed has more room to hike rates without worrying about cracking the economy. All right, so guys, that's it for the economy calendar. We have a short calendar this week. Do you have any questions before we move to the charts? Do you have any questions before we move to the charts? Tayu said no. So, okay. Let's now move to the charts. Let me stop. Raya also says no. Okay, so now let me share the charts. 1 second. So did you guys watch the game last night? All right, as always, we start with the DXY. Let's go to the weekly. Not copy, no, I don't want to copy. All right, so last week, the DXY closed somewhat bearish, and we're still expecting to see a retest to 100 area or level. So anything around that is going to be a good rejection point. Let's go lower in time frames and see how that looks. Now, when it broke below this trend line, it did not invalidate. So this is not an invalidation yet, because there are rules to invalidate a trend line. We mentioned that in our live stream. I think it was not the previous last Thursday. It was the one before. So if you want to understand more about trend lines, I encourage you to go and watch that live stream, because we talked a whole lot about trend lines and how you use them. So this trend line got broken. So this is an early signal of a possibility of a reversal to, or like a break lower to this trend line, which is around 99. So if it does break below and close below this area, if it closes below 100, we're most probably going to 99. But if it doesn't, it might be just an intraday penetration and we continue to go up. So let's go lower to 4 hours and see how that looks. Okay, so look where it got rejected from, the 200-day moving average, which is a very important moving average, obviously. So we might be continuing to go higher from here, or we might just drop and continue correcting towards 99. So if we do correct to 99, expect euro, GBP, gold, silver to go up temporarily before it continues to drop after this continues to go up. Okay. Everyone enjoyed Spain's victory. Yes. Very interesting. I love the outcome. Yes, wasn't a very good game. Finals are too conservative these days. Yeah. Because of, I think they have so much to lose. So they're not very comfortable playing. And if you look at the third place, fourth place game, which was between England and France, that was a great game. Why? Because they have no pressure. And this also applies to trading, because when you have no pressure, trading demo, for example, you have nothing to lose. You just like kill it there, right? But when you have something on the line, then your psychology comes in and you start uh, having the emotions of fear, and that's why you don't perform as as you would perform if you had no pressure. So pressure is part of anything in life, any walk of life, any profession, anything. It has pressure. So the smart trader or the smart individual would be able to handle that pressure. And I think Spain yesterday showcased a very good personality in the game. They controlled the game almost for, I don't know, the whole game, not for almost. They controlled the whole game. It was like 20 shots in the first 90 minutes, so the original time for Spain, and zero for Argentina, meaning that they had everything under control, but they were lacking the finish. Maybe they were not lucky. That kind of things happens, but overall they showed composure. They showed good personality. They showed a strong personality actually, and that's, I believe, what won them the cup. What is your advice on handling pressure? I tend to perform the worst when I'm close to hitting a milestone. Yes, because that's all in your head, Yahya. When you're close to hitting a milestone, this becomes like a defining moment for you. The way you look at yourself, the way you think of yourself. So the best thing to do is remind yourself that whenever you're close to the milestone, I'm already there. I'm already like, I'm close to the milestone. So I am that good enough. I am good enough to reach that milestone. So either I reach it or not, like whether I reach that milestone that I'm like hoping for or not, I'm like, nothing has to do with my self-worth. So if you just like extract yourself from the whole picture and just trade for the sake of trading and for the sake of doing what's right, and you just like stop thinking or like connecting your self-worth to it, I think that would help a lot in pressure. That's what I see most traders suffer from, which is the pressure that they create for themselves. Spain deserved the win. I agree. I lost $188 last week. I just have to leave the market last week to gain my confidence back. Yes, and my advice would be to start trading very small positions just to keep, like, to gain your confidence back. Like place like the lowest possible lot size, which is maybe 0.01, lowest possible. Place your stop loss or TP, and once you get 3 consecutive TPs, you will gain your confidence back, and you start scaling up your position size. So pick on Forex Expo site as has research of trading. Yes. I will be speaking in the Forex Expo. So yes, I didn't see my picture, to be honest. So I'll go and check. All right, so back to the charts. So DXY is like, now it's either or. Pardon me. It's either or. Either we stop here and this area supports it from going lower, or we break it and we continue to this level, which is 99.2, 99.1, that area, okay? And depending on that, we decide what to do with the rest of the instruments. So yeah, DXY is still to show us, is yet to show us what's the outcome. If it continues going up from here, great. If it continues going down from here, great. We know what to do. All right, so next we go to Euro, which is the inverted chart of DXY. Okay, so that's a very important level that I had this level marked out long time ago, and it got rejected from it. So this level might actually push it toward the 115, 114.80 before it continues to drop. But which makes sense for the DXY to actually go lower to 99. Okay, that's for the weekly. Okay, now on the daily, however, we have something else. We're retesting the trend line. So we might be just dropping from here, and we have the DXY going up from here. So which means that we have one extra piece of confirmation or information that shows us that it's most likely for DXY to continue going up from here, while Euro is most likely expected to go down from here. So keep that in mind. All right, so which levels are we looking for? We're looking for the 1.1470, which is not very far from 1.1490. I think that would be a good place to place a sell with stops above this area, because it got rejected pretty nicely from this trend line. And as you can see, we have lower lows, lower highs, so a beautiful downtrend. Okay, and then let's move to GBP/USD. Let's see how Andy Berman is doing. So the GBP is going up. Okay, the weekly closed bullish, and we opened on a bullish note this week so far. And then we have the daily. The daily says a different story. The daily is showing us a trend line that it might be rejecting from, but it's still too early. As I keep saying in every live stream, in every Monday analysis session, I tell you that this is actually the chart of GBP/USD is showing a range. So I wouldn't be interested to buy or sell. I wouldn't be interested to trade this pair. We have many more. Let's take a look at the USD JPY. So the weekly shows bullishness on USD JPY, so weakness for JPY and strength for USD, which supports the DXY going up from here. So we have now two things, or two other charts. If we connect them together, we have two charts showing us that DXY is most likely to go up from here, not down. So we have the Euro supporting that, and we have the USD JPY supporting the same thing. So we move to daily. Okay, so on the daily, if you take a look, we have an ascending triangle, which is considered as a continuation pattern. Sorry, 1 second. Which is considered a continuation pattern. So like almost equal highs and ascending lows. So that's a continuation pattern. What was before this? It was an uptrend or a push to the upside. So this is most likely going to continue upwards, which also supports our DXY going up from here. That's what I plan to do, is like, you read my mind. It's just textbook, Taiwo. That's what you need to do. Like I do that all the time. Whenever I'm stuck in losing streaks, I just go down in my position size until I gain my confidence back. And yes, this is going to continue happening forever, I think, because like I've been in this market for, I don't know, 11 years now. Nothing changed. Sometimes I get into losing streaks. Sometimes I start losing my confidence. So I need to rebuild it. And the best way to do that is go down in lot size, and then, or position size in general, and then you continue building from there. Your experience based on the advice stop loss. Thank you. Which do you think is advice for use online or SMC or both? I don't think they contradict. Like SMC and trend lines are actually the backbone of technical analysis. So because the first rule you learn in technical analysis is that the trend is your friend, and you never go against the trend. So the trend line should be working with any other. Like I haven't seen once a trend line strategy that does not work with any other tool. be it SMC, be it Elliott Wave, whatever. Okay. Then, okay, Arif Khan. I heard somewhere Japan is the largest participants of US treasuries. If they sell that, they can shake the market. Is it true? I think you're referring to China, not Japan. China were actually the largest participants, but now, um, like recently, after Trump took office, they started reducing their possessions of US treasuries because they don't trust Trump and they don't trust what they can do. Because when you invest in an economy or when you invest in a country, you're taking the risk of that country. And what's the risk there? You're putting your money in their hands. So if you have some kind of beef with them or you have some kind of tension between you and them, uh, they have your, as we say it in Arabic, like they have your neck. So they can just freeze your money. That's how it works. That's why they started reducing their possessions of treasuries. If they start selling, and they did start selling last year, if you remember in April 2025, the market crashed. Why? Because it was a mix of the tariff like spook from Trump. He was trying to scare the markets with the tariffs, plus China started selling a large position of, or a large amount, or a large portion of their possessions in treasuries. That's why the bond market went down and the yields went up. Okay, so yeah, that's what Trump was trying to avoid, which is he was trying to bring down the yields, but that didn't work because China did not help him do that. They started selling their bonds. So when you sell bonds, what happens to the price of bonds? They go down. What happens to the yields, the bond yields? They go up. That's the relation between bonds and yields. It's a negative relationship. But that's a great question, Arif. Thank you. All right, so we're done with your ZJPY. And to answer your question, yes, Japan also has possessions in US Treasury, but they're not one of the largest participants. China was one of the largest. Okay, so let's take a look at gold now. Let's take a look at gold. Okay, gold closed last week bearish. Let me see if it closed. It closed below the band, so it's still pretty bearish. Let me go to the daily now. Okay, the daily is showing some kind of support around this area, which is the 950. So we just needed to close 1 day or 2 days below 950, so that we can continue dropping towards those levels, which are 3800, 3700, 3600. It depends. But for now, based on the reading of the daily candles and daily chart, I think we're going to be like correcting towards what, 4050 maybe, before continuing the drop. Let me go to the 4 hours. Okay, those trades are still running. I think we entered the second week now, or maybe the third week of those trades. July 7th. Yeah, this is the second week. I've been holding those for 2 weeks now. All right, so it might reach this area, which is this moving average. This confirms the daily reading. The 50-day moving average might be the next target for gold, which is 4050, and then we may start correcting downwards. If it does not stop at 4050, 4070 might stop it, and then we start the big move downwards. Now, what happens if it breaks above this area, which is 140? Then the whole scenario for the drop becomes weaker. Now, I know that I've been talking about the drop for like almost, I don't know, the beginning of the year, so 7 months now. I've been talking about this drop, and I've been talking about the 3800 and the whole thing. But I'm also not married to this idea. So if it breaks above and it shows me a reversal sign, I'm going up with it. I'm not going to keep um, holding on to my bias, regardless of what the market is telling me. Okay, so you do not trade your belief, you trade what you see. You do not trade what you feel, you trade what you see. Um, okay, I heard somewhere Japan. Yeah, we already answered that. I thought that this was a new question. Then we have the 1 hour. The 1 hour also confirms the 450. So 450 is actually a good level. I'm going to place my alert here because I might be interested to re-enter here. Okay, done. On the hourly, it shows that the 4050 is on or contradicts with the 200-day moving average. So we have the daily, the 4 hours, and the 1 hour all confirming one number, which is 4050, as a possible uh, rejection area. So we have to wait and see. But for now, nothing to do. We just need to wait. So if DXY drops lower, let's say another like 50, 50 points, 60 points, I think those would be enough for gold to reach the 4050. This market is right now following trend. I hope it breaks and we give next big move. I'm waiting for it. All right. I have a question. What do you think about price action versus ICT? Can you give honest review? Well, ICT is a whole trading system. To be honest, I haven't studied ICT, but I came across some of the concepts in ICT, which are like very similar to the the basics of classic technical analysis, such as fair value gaps, such as I don't know if this is ICT or SMC. I honestly don't know. The fair value gaps, the breaks of structure, the change of character, the whole thing. I believe that ICT has some very um, interesting and very solid tools, but me personally, I do not use it because price is that already telling me everything I need to know. So ICT is just for me, it's just a wasted energy because me, I come from the technical or the classic technical analysis school. So growing up, I didn't learn ICT, so maybe that was the main idea. Um, Technical analysis or classic technical analysis is already giving me accurate enough entries. It's giving me good risk reward ratios. So for me, I don't just like hop around and try to find something to replace my own strategy and own way of thinking, because if it works, no need to fix what's not broken. That's the main idea. Like, if it's not broken, if it works, why would I be looking for something else? um Most time I trade my mind and it affected me. Taiwo, can you rephrase? I didn't understand. Can trade gold, it's a lot for me. Okay, you are most welcome, Sayed. Okay, so that's for gold. Let's see silver, because silver is actually a cheat code for gold. It tells us what's going to happen before it happens on gold. So last week when it broke this low, which happened on back in June, it broke below before the gold broke below June's low. So we knew that it's a matter of time before gold crosses below this area, and it did cross below this area, which is June's low. So now it went back up to maybe just like correct. So now it's around the 126-day moving average. It might go all the way up to 58, which is the 200-day moving average on the hourly time frame. Let me check the 4 hours. The 4 hours, Yeah, it still looks very nice. Like if you draw a trend line here, it's still below the trend line. So we might be reaching the 58 and then we continue dropping. So the 4050 on gold is equivalent to 58 on silver. If silver reaches 58 and gold, um, like by that time, still didn't reach 4050, I would be like most likely positive that it's going to reach 4050. So I'm going to wait. I'm not going to jump in. I'm not going to FOMO. I'm just going to wait. But what is your best trading approach? My best trading approach is price action. That's I think that's very obvious. And some people say that you have too many indicators on your chart. Those are not many indicators. Those are one indicator with different times. So it's the moving average, is a simple moving average with different closes so that it draws the support and resistance for me so that I don't have to. And this method actually showed to be very accurate. So I just went with it. But I don't take decisions or I don't make decisions based on moving averages, indicators, or whatever. I just take them based on the price action. I mean, I follow my mind when trading most time, and it just affect me negatively instead of going with what the market is saying. Yeah, like that never works. Following your mind and not following what the market is telling you. Uh, like at the end of the day, we're humans, and most importantly, we're not only humans. We don't know what actually happens or what's going to happen. We don't have any guarantees that tell us, yeah, gold is going to 3,800. Like, okay, my analysis shows that. The reason I believe in my analysis is because I tried it many times in the past and it worked. So that's why I have confidence in my um, analysis. But that doesn't mean that my analysis has to work. No, sometimes it reaches 3,900 instead of 3,800 and it reverses. So what do? I waste $3,000 to the upside or $2,000 to the upside for $100? That would be stupid. You get my point? Like, okay, your analysis already worked. When it was $5,000, you said it's going to 3,800. Now it reached 3,900. So that's why you start entering gradually. 3,900 is a good place to buy. 3,800 is a good place to buy. 3,700 is a good place to buy, and 3,600 is the best place to buy. But will I be so cocky and say, no, I'm going to wait for 3,600 because I know price is going there? I know nothing. Nobody knows anything. Good morning, Mr. Breva. All right, so that's for silver. I think we checked everything. Let's take a look at the NASDAQ real quick and call it a session. Okay, so NASDAQ is still, did it break here? Yes, it did. So this is invalidated. Forget about it. This is still invalid. So yeah, we might reach this area since we closed here, but we need to see a close below 28,200. So this area before we can say positively that yeah, it's going to reach 27,000. So 28,200 is going to be the pivot point for us. If it closes below, we're most likely continuing the drop to this area. Let's check the weekly real quick. Okay, the weekly is, how does it look like? It looks very bearish. Yeah, so it's most likely going to retest the 27,000 level. Let me check the 8 hours. 8 hours looks very bearish. So price closed below all moving averages, the fast ones and slow ones, the big ones and small ones. So yeah, that's very bearish. We might be retesting this area of 29,000 before continuing the drop, or like 28,900. Maybe that would be a better place to look for sells or to look for setups, sell setups there. Okay, yep, same. Nothing new here. Let me check the. Okay, so that's an engulfing candle on a weekly time frame. That's something. We had this engulfing. We went up to retest. We couldn't break above. We formed another bearish engulfing. So yeah, this might be the start of the correction or the big correction for um, indices. Okay, so we still need to break below this low here, which is 7,300 on S&P. This is done. This is done. Okay, 4 hours. Yeah, like it's somewhat ranging on 4 hours because it's been like this for 2 weeks. So yeah, I'm somewhat bearish on those. I'm bearish on um, stock indices. Let's take a look at the Dow Jones. Okay, so Dow Jones closed bearish for the second consecutive week. Daily looks also very bearish, and we might be retesting this area of 51,500. And then 4 hours. Yeah. On the 4 hours, however, we still have like a very strong support under us, which is this area, the 200-day moving average. The 52,000 is very important. So any closure below 52,000 might be our sign that the correction or the deeper correction has started. Morning, okay. Okay, so Euro AUD, without looking or before looking, I think it's going to be bearish. But let me check. Euro AUD. I don't have it. Uh-huh. Euro AUD. I need to clean my watch list. Okay, so okay. Yeah, as expected, it's bearish. Why? Because Euro is bearish. And Euro is stronger than like weight-wise, Euro is heavier than AUD. So since Euro is bearish, so I expect Euro AUD to be bearish as well. I don't like this chart, to be honest. But even on the weekly, we're still bearish. On the daily, it would be crazy bearish, as you can see here. Okay. But it's starting to show some strength around this area. So this might be a good support. If you want to trade it or like short it, you need it to break below this area, which is 1.612. And then we go to 8 hours, take a look. It's actually like still bearish to me. And I believe this is just a matter of time before it breaks this. So let's wait and see. Hello, Soham. DAX, sure. DAX. I think it's just like making new all-time highs, like nothing new here. Let's go to the weekly. Oh, actually, it's following S&P. It's following the S&P and Nasdaq. So bearish close for the second consecutive week. Daily is somewhat bearish, but it's still above the major moving averages, which are the 126 and 200-day moving average. So if it managed to close below 24,300, that actually might be bearish for the DAX. But if it gets rejected from this area and continues going up, I have no reason to think that it's going to drop for now. Okay, so let me draw this here. Okay, yeah. So we're still above, like we're still sloping upwards. So I have nothing to think that the DAX is going down. So if I was in your place, I would be looking for buy setups. Yes, Soham, I did, and we just discussed it before you joined. Uh-huh. And we even analyzed it, not only discussed it. Good morning, Mesa. Hi, long time. Yes, correct, Mesa. So just a recap, we have the DXY deciding what's going to happen this week. If it continues going up from here, then anything priced against it is going to suffer from deeper losses. If it continues to correct towards the 99 area, then we might see like some positivity in everything else, like Euro, USD, GBP, USD, gold, silver, and even other currencies. So the likelihood of dollar to continue up from here is slightly higher than the likelihood of it dropping towards 99. It's a 60-40. It's not very far. So 60% it's going to continue going up from here. 40%, which is not a small percentage, is that it's going to continue correcting towards 99. So I hope this was helpful. I hope you actually got something good from it. You learned something. I hope I answered your questions. I know I enjoyed it, so I hope you did. Thank you very much for watching, and I hope I'll see you in the next one, guys. Take care of yourselves and trade responsibly. Bye bye.